Benjamin Franklin may have discovered electricity, but it is the man who invented the meter who made the money. Earl Warren. Hello, everybody, and welcome back to yet again another great video. This is your host, KG. Welcome back to Guevara Digital Asset. All right, folks. So today we have very important news that while it's getting mentioned, it's being understated. Everybody talks about stablecoins and CBDCs, and everybody gets scared of what the possibilities are with them on the negative side. But nobody's actually talking about the benefits and the power of them. So today we're going to be talking about a strategy that all the banks and corporations are taking, folks. And while many people think that that strategy is Bitcoin, they would be partially right. However, folks, I'm here to show you guys the strategy that they're actually taking to be able to expand the market the way they would like to. All right, folks, so we're going to start off with this op-ed of Visa. Visa is saying that every institution that moves money will need a what? A stablecoin strategy, folks. All right, we're going to blow through this pretty fast. Visa has expanded its stablecoin settlement solution in the Central and Eastern Europe, Middle East, and Africa region, dubbed the CEMEA region. The firm started piloting USDC settlement for cross-border payments in 2021. To date, Visa has settled over $225 million in USDC volume for participating clients. As it looks to establish itself as a key player in the space, Visa announced a major expansion of its settlement solution on Wednesday, the 18th of June, 2025, is what it should say. Not so long ago, stablecoins were treated as a threat to Visa's business model, but the firm is pursuing an if you can't beat them, join them strategy, folks. See how everybody is picking a strategy? That strategy, folks, I'm here to show you guys what that strategy is. All right, folks. So this is just one. There's so many more. So this is Visa's actual website. It says empowering the future of payments with stablecoins. It says stablecoins combine the stability of fiat currencies with the speed of crypto, enabling digital payments that are fast, borderless, and accessible to many, many more. Learn how Visa is a leader working to integrate stablecoins into the next generation of payments with innovative solutions for banks, fintechs, and crypto wallets. All right, folks, so this is what they are pitching to businesses to get them to move on to the stablecoin project, is what I'm calling it. All right, it says streamline your business operations with stablecoins. Stablecoins represent a strategic opportunity for banks and fintechs to enable a fiat-denominated store value and more efficient cross-border money movement into and out of emerging markets, folks. All right, it shows supply. I don't know, I say supply back there, but it says $217 billion. It says 46%. Oh, okay. 46% year on year, which is what YOY is, year on year, growth in circulating supply. Their volume is $6.4 trillion. Dollars. That's a 63% year on year growth in adjusted transaction volume, folks. Yes, folks, they're moving trillions of dollars in stablecoins, whether they tell you guys this or not. And then this is part of the strategy that Visa is offering. The package includes consulting and analytics, stablecoin linked cards, kind of like crypto.com, how they offer Visa uh, cards where you can load up your crypto and spend it. Yes, folks, that's been a thing. Cross-border money movement and infrastructure via their VTAP program with the Visa tokenized asset platform. See, words mean things, folks. Visa's tokenized asset platform. Visa clients can mint, burn, and transact in stablecoins. You think it's just Visa doing this? Mm-mm. You guys recognize this logo? Yes, folks. That's MasterCard, and right on there, look what their op that is categorized as. Orange for Bitcoin, and then blockchain because it's the utility that underpins digital assets. Very, very recent too. Today's August 15th. This is from the 23rd of June. It says, bringing real utility and global scale to stable coins, folks. MasterCard will join Paxos Global Dollar Network to shape stablecoin adoption, enable USDG, USDC, PYUSD, and FIUSD across its networks and launch new capabilities through MasterCard Move, which is one of their products, and this is the second product, MasterCard Multi-Token Network. All right, folks, I just want to quickly read. It says each wave of payment innovations has reaffirmed a simple truth. Consumers and merchants adapt solutions that are convenient, secure, dependable, and available, folks. Don't forget that one. We don't see stablecoins disrupting this dynamic. In fact, they reinforce it. Stablecoin hold tremendous promise, but should be held to the same simple but high standard. Oh yeah, real high standard you banks are held to. There's still work to be done to fully recognize their promise. All right, folks, look at this. We're not just enabling stablecoin transaction, we're helping to make them safe, compliant, and built to last. Think it's just Visa and MasterCard? It's really not, folks. Let me just take a quick look at this. I just want to show you guys the caliber of players getting into this. This here, folks, is from the Federal Reserve statistical release. This here shows you our banks and rankings by collateralized assets. JP Morgan is number one, folks. Bank of America is number two. Citibank is number three. Wells Fargo is number four. And and I just want to point out US Bank is number five, Goldman Sachs, which is a behemoth, number six, PNC Bank, number seven, Truist Bank is number eight, Capital One number nine, and State Street, folks, is number 10. Let's just keep going. TD Bank is number 11, Bank of New York Mellon, shout out to BNY Mellon, number 12. I don't know that bank, and it's a bunch of letters, so I can't really say it. Uh, Morgan Stanley's number 14. First Citizens, I'm not sure what that is. But this is another Morgan Stanley. Citizens Bank is way down here. But the one I want to show you guys, folks, also is Santander is number 28. Where's American Express? Oh, Amex right here. Amex is 21. And Santander number 28. I would like to show you guys, folks. These are the banks and their rankings. Insured U.S. chartered commercial banks that have consolidated assets of 300 million or more, ranked by consolidated assets as of March 31st, 2025. So again, very recent, folks. And the reason why this is important, folks, is because JP Morgan is number one and Bank of America is number two. Citibank is number three. We're going to focus on those three for now, but we'll talk about a few more. Look at what is happening here, folks. Jamie Dimon says JP Morgan Chase will get involved in stablecoins as fintech threat looms. All right, folks. And you just want to sit there and ask yourself, what threat is it that's looming, the fintech threat? All right, let's just read on. JP Morgan Chase CEO Jamie Dimon says he doesn't get the appeal of stablecoins, but he also cannot afford to stay on the sidelines. No, you can't afford to potentially be displaced because of a stupid decision. Let's actually word it the way it should be so that the American people can understand that entities like this, JP Morgan Chase, and CEOs like that, Jamie Dimon, as big as they are, folks, they make mistakes also. Just want to point that out. All right. And the message. So Jamie Dimon gave that during an earnings conference call, folks. Whether his company, the largest and most influential US bank, was exploring the technology. So people are basically questioning him, like, yo, my man, you run the most influential bank as you state. All right, folks, which I don't know, maybe, yeah. I would say it's a toss up between a few entities, but that's not the purpose of the conversation, folks. But my point is, imagine somebody this big allowing you to not get into something that's going to be massive, folks. Stablecoins, as the name suggests, are a type of cryptocurrency. Nope, they're a type of digital asset. But sure. Stablecoins as the name suggests, are a type of digital asset designed to maintain a steady value that are usually pegged to fiat currencies like the US dollar and the euro and the yen and the renminbi and the Brazilian currency, whichever one that is, the Saudi Arabian currency, whichever that one is. Um, Stable coins, folks, is going to be huge, huge. But let's move on, folks. We're going to get involved into both the JP Morgan deposit coin and stable coins to understand it and to be good at it. So they're basically not confident in their skills yet around this space, but that's because they came in way too late into the game. All right, folks. Diamond, I'm assuming that's his age, 69, is one of the most vocal opponents of certain cryptocurrencies like Bitcoin. Yeah, I bet. That's because compared to the value of everything they own, Bitcoin has outdone them by millions and millions of percent. I'd hate them too. See, the problem is that unlike Visa, they didn't exactly join a if you can't beat them, join them mentality, and God only knows how much profits they could have made. But this bank is a juggernaut in the global payments industry, helping move nearly $10 trillion daily. And so it makes sense that it would explore stablecoins at a time where the regulatory framework for the technology has opened up in America. Let's get that straight. All right. Failing to do so could cede grounds to fintech players who are looking to recreate elements of the regulated financial ecosystem. They're not trying to. They already did. And I'm going to uncover that for you guys, folks. Just tidbit by tidbit, because I understand this is a lot of information for you guys to take in. So I'm going to make sure that I do that nice and slow for you guys, but we're going to do it together. You know, these guys are very smart, Diamond said of his fintech competitors. They're trying to figure out a way to create bank accounts to get into payment systems and reward programs. And we have to recognize and we have to be cognizant of that. And that would be a way, and the way to be cognizant is to be involved. Folks, what Jamie Dimon really means is that he's afraid to not get involved because these guys, they're changing up the game in ways that he could just never, ever, 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 ever think of. Because, folks, banks create technology, but for the most part, banks, much like government, they often adopt technologies, folks. They often adopt technologies created by the private sector, folks, and then it gets sold to them. But what happens when one company is trying to help everybody and everybody gives it their back? And then all of a sudden, this company gets sued, their assets drop in value, and people down talk them. And then all of a sudden, they win the lawsuit. And people start thinking, like, wow, that digital asset not just won the lawsuit, that digital asset has regulatory clarity. Yes, folks. That is what I'm talking about, folks. But continue. So that's just JP Morgan, folks. Check this out. Remember, Bank of America, they were the second most valuable bank in the United States. Bank of America has announced it had Bank of America has announced it is getting ready to enter the stablecoin market after initially slow progress due to regulatory uncertainty. Ooh. Brian Moynihan, CEO of Bank of America, made the announcement on July 16th, 2025, during an earnings call. And there goes another earnings call in New York. See how everybody's bringing them the smoke? Like, yo, so what are you guys doing about this? But I will say, Bank of America is not sleeping at the wheel. Moynihan said the bank is working on developing a stablecoin, but stopped short of giving a timeline of its launch. We feel both the industry and ourselves will have responses. We've done a lot of work, he said, adding the Bank of America was trying to gauge client demand and appropriate partnerships with other players to make the digital asset a reality. Oof. We're still trying to figure out how big or how small it is because in some places there are not big amounts of money movement, not yet. So you would expect us all to move, our company to move on that, he said. That was like a scuffle at the end. Bank of America's announcement came amid a series of three crypto related bills that are moving through Congress. The first and most highly anticipated act, the Genius Act, was passed late last week and set a regulatory regime for stablecoins, folks. Folks, it's really time that you guys pay attention to what it is that's going on. If you're not, this is another one by Bank of America. It says Bank of America praises who? Praises Ripple for an impact on cross-border payments. All right, folks. Look at that. Look at that. Ooh. Ripple's an exception. Bank of America recognizes the transformative power of technology and facilitating what? Real-time payments, folks. Oh, yeah. APIs are the key driver of real-time payments adoption, according to the report, and have revolutionized connectivity as well as transaction processing for customers. I love how they're thinking about their customers. That's a good way to look at it. Espen Cat, head of Treasury Products APAC at Bank of America notes, we're already seeing open banking become a reality in the EMEA region, that is, with the API mechanism being used to develop many new use cases. According to Venkat, the transition to open banking and the use of APIs will enable a rapid and informed, keyword informed, decision making, allowing near real time information flow to meet what? To meet treasury needs. Not their treasury wants, their treasury needs, folks. All right. Bank of America's relationship with Ripple. Ripple has been forging partnerships with numerous leading financial institutions globally, including SBI Holdings, the Saudi Arabian Monetary Authority, Banco Santander, Western Union, UAE Exchange, and American Express in recent years. But the company's collaboration with Bank of America in particular has been the subject of much speculation over the years. Wonder why that could be. Well, maybe because in April of 2020, right during COVID, may I add, the partnership with the Bank of America was confirmed by Julie Harris, the head of global banking at Bank of America, during an episode of the bank's Treasury Insight podcast. Harris stated that Bank of America aims to provide its customers, who? Its customers, with the ability to conduct transactions anytime and anywhere by integrating what? New solutions, folks. She specifically mentioned Ripple. Of course she does alongside Swift as one of the bank's key partners. Folks, when you're building partnerships, you can never poo-poo on the incumbent. You have to try to work with them, see how you can work together to make somebody better, and then they either adapt or they decompose, we'll call it. Moreover, rumors of a close relationship have persisted, with new hints surfacing regularly. For example, CEO Brad Garlinghouse reportedly said at the Ripple Swell 2022 conference that Bank of America would gain a what? A competitive advantage, folks, by using Ripple's on-demand liquidity product once the ongoing litigation with the United States Securities and Exchange Commission is what? Resolved, folks. Look at this. At press time, the XRP price was 47 cents, folks. And it was holding above, look at that. For more than 200 days, 47 cents, it was just holding above the average, folks. All right, folks. So this is, look at, oh, this was, oh man, look at this. This was during COVID right here. XRP dropped all the way down here, and we can't move over for the price, but wow, look how low it was. See what I mean? They would sell, 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 and then people were scared. And then look at that large buy candle. And then some people sold. I don't call that sell it, I call that taking profit. And then some people were like, yep, I'm going to buy and then sell. And then people were playing with the market here. This here seems to be on, let me see. Oh, that's on the 1 day. See right there? That's on the 1 day. So these represent different days. So this was an extraordinary day. And then that was another day where deflated a bit, and then they chopped up and down a bit. And then look at this from here. Look at this all the way up. Okay, so they actually have lines for us. So this one here, folks, this is the 44-cent mark, and then it crossed all the way up to 54 cents, folks, in a matter of days. So you just have to be paying attention, folks. But I just want to show you guys. Remember, Jamie Dimon said the fintech threat looms, and that's why they're getting involved in stablecoins. Yeah, I found their fintech threat that's looming, folks. Says right here, moreover, rumors of a close relationship has persisted, with new hints surfacing regularly. For example, CEO Brad Garlinghouse of Ripple said at the Ripple Swell 2022 conference, what? That Bank of America would gain a competitive advantage by using Ripple's on-demand liquidity ODL product once the ongoing litigation with the United States Securities and Exchange Commission, yep, is what? Resolved. Well, guess what, folks? It's resolved. Yep, look at that. Poof, just like that. It's resolved. And guess what? They still see that as a threat, folks. And they see it as a threat, folks, because Bank of America is entering the stablecoin market, folks. They're not taking it easy. Bank of America's announcement came amid a series of three crypto bills moving through Congress. Yep, the Genius Act and a few others, folks. But that's not all. That's not. It's not just Visa card and Mastercard. It's not just J.P. Morgan Chase. It's not just Bank of America, folks. It keeps going, folks. Look at this. Stable coins emerge as alternative. American Express CEO says transferring money via stablecoins is a viable substitute for traditional payment rails. American Express CEO Steve Squeri told investors during an earnings call. See, everybody's bringing it to them. All right, folks. Rails like ACH and Swift are well designed and worked too well to be fully replaced by digital currencies, he said. Let's dive into their dive brief. Transferring money via stablecoins is a viable substitute for traditional payment rails, American Express CEO Steve Squeri told investors Friday during another earnings call. So these earnings calls are getting very popular, folks, and that's good because it's abundantly clear that somebody is holding these CEOs accountable, um, and not their hand to the fire, but like close to it where they can feel the heat. While he stressed that digital assets will likely never fully displace rails such as the automated clearinghouse and SWIFT, the passage of the Genius Act, which provides a federal regulatory framework for the stablecoins, means that companies like American Express will take a closer look at cryptocurrencies and how to use them to the best of their abilities moving forward. That's what they should have said. Will they replace the existing payment rails? No, Squarey said of stablecoins. Are they a good are they a good proxy and a good alternative to ACH and Swift payments and wires and things like that? I think so. Folks, that's just the juice being dropped. Look at this. Citibank, stablecoins and the future of money. All right, folks, look at this current state. The institutional adoption of stablecoins is still in its very early stages, estimated at zero point 0.5 on a scale of 0 to 10. Wow. Folks, so for those of you who think you're late, understand that you're not late, folks. You are not late. And the reason for that, folks, let's read on. Interest spans various sectors, banks exploring, bring in traditional money like the M1 and the M2 money supply on chain. On chain, folks, is another word of saying tokenized. Asset managers are integrating tokenization of real world assets like securities, bonds, money market funds. Stablecoins are crucial for what? For liquidity in the area and merchants. Looks like they messed up somewhere there, but sure. Where adoption is slower due to the cost and resources needed. What? For infrastructure upgrades. There you have it, folks. Solutions like linking Visa credentials to crypto wallets are bridging the gap. Financial infrastructure, folks. Global interest and use cases. Stablecoins are particularly attractive in emerging economies, offering a dollar denominated store value and facilitating efficient cross effective global transactions for businesses and merchants alike and unalike. Domestic use cases within the US's Domestic use cases within the US are less prominent. It's because we're going to be exporting the stable coins, folks. Our job is to make sure these stable coins run efficiently effectively and cost effectively, folks. It can't be expensive to transact in. It defeats the purpose. All right, folks. But again, that is not it. Look at this. This is the real reason why they're getting in. This is part of that fintech threat that's looming. It says Tether and Circle now hold more US debt than several nations. Circle and Tether hold more US treasuries than Germany, South Korea, and the UAE combined. Stablecoin market could grow from 270 billion to $2 trillion by 2028, reshaping global debt markets. Transaction volumes now rival Visa, with the adoption surging among global institutions. Look at that. Transaction volumes now rival Visa. So Visa is the number one merchant service provider offering merchant services. And fintech firms' transactions now rival Visa, folks. So when we were wondering what was Jamie Dimon's fear of a looming fintech threat, there you have it, folks. Transaction volumes now rival Visa. And the reason why that's important, folks, is because so IRO is XRP a stablecoin? It says no, XRP itself is not a stablecoin. XRP is a cryptocurrency and digital asset native to the XRP ledger, designed primarily for fast and efficient cross-border payments. It was created to be faster, cheaper, and greener alternative to other digital assets like Bitcoin. However, Ripple, the company closely associated with XRP and the largest backholder of XRP, may I add, has launched its own stablecoin called what? The RLUSD. Folks, what is the RLUSD? This is Ripple's website. The RLUSD, folks, stable, transparent, trusted Ripple US dollars. Shout out to Monica Long. You guys should really listen to everything she has to say. This is the president of Ripple, the company that is creating the most amount of use cases around the XRP ledger using XRP and also happens to be the largest holder of XRP real-time payments and easy fiat stablecoins on and off ramps. So, folks, this is the fintech threat looming that Jamie Dimon is in fear of. It's right here, folks. It's Ripple. Ripple, the company. Hold, buy, and trade tokenized US dollar on chain with the stablecoin that's held to higher standards and no reservations about our reserves. What they mean by that, folks, is that they are definitely going to be either one-to-one collateralized or over collateralized. Because let's get serious, who's in business to just break even? All right, that's where fees and all that stuff come in. And it's just a matter of time, folks, until somebody's displaced. That's the number one. But one thing I do know, folks, is that Ripple is being tapped by the powers to be able to get ahead and to gain a competitive advantage by using Ripple's on-demand liquidity product. And if that's not enough, folks, that they have their own stablecoin, look what Ripple's doing now, folks. Exclusive. Ripple, the company, to buy stablecoin platform Rail for $200 million. This was August 7th, 2025, folks. So very, very recently, because today's August 15th. It says August 7th, Reuters. Ripple will buy stablecoin payments platform Rail for $200 million. The company said on Thursday, weeks after U.S. President Donald J. Trump signed a law that raised expectations cryptocurrency tokens are about to enter the mainstream. Ripple, a crypto company that is closely associated with the XRP token and issues its own stablecoin called the RLUSD, has invested heavily in stablecoin infrastructure in recent months. The acquisition, which will close in the fourth quarter of this year, pending regulatory approvals, will enable Ripple and Rail to deliver the most comprehensive stablecoin payment solution available in the market. Folks, this is the fintech threat that's looming. Folks, it will also add virtual accounts and automated back office processes to Ripple's existing payment capabilities, the company said in a release. As regulations become more clear and the space has grown and matured, this opportunity for stablecoin payments is really ripe. Those who know about fruits know how sweet something is when it's ripe. Imagine when it's really ripe. That means it's really sweet. And the acquisition of Rail just really solidifies our market leadership in stablecoin payments. Monica Long, president of Ripple, said in an interview. This is Monica Long, folks, president of Ripple. Folks are not in this game of digital assets and cryptocurrencies and tokenization of real world assets to double their money, folks. They're not in this game to triple their money, folks. They're in this game because the whole digital asset space, folks, the cryptocurrency market entirely, it's an over $4 trillion market, folks. Look at the market caps, $2.3 trillion for Bitcoin, 557 billion for Ethereum, $184 billion for XRP, folks. This isn't no small potato. Look at that. XRP, 184 billion. Citigroup, 173 billion. So the number three in cryptocurrencies beat the number three in the traditional financial space. XRP is more valuable, folks, than Citigroup by market capitalization. Number two, folks, is Bank of America. Bank of America does have a market cap of $340 billion, folks, compared to what? Yes, folks. Folks, when we're comparing the second most valuable bank in the United States, the second most valuable cryptocurrency in the digital asset space, folks, it's just not a comparison. $557 billion, again, compared to 390. So cryptocurrencies number two definitely outdoes traditional financing, the traditional banking's number two. So again, when these people are trying to tell you that they're doing this for you, no, they're not. They're doing it for themselves. Look at this. This is the real joke. JP Morgan Chase, folks, $794 billion, folks. That is no small fry by any standards. But look at this, folks. Look at the number one digital asset, folks. As of this recording, Bitcoin's current price, folks, is 118,541. Now, that's not small by any stretch of the mind. Look at this. Their market cap, folks, let's read this whole number. That's 2,360,181,305,188, folks. All right? That's massive. Massive. All right, folks. So let's just quickly do some digital calculations. How much is 2,360,181,305,188 divided by $794.02 billion? You can't see it, but it's 2.9724. So basically, just under three, just all right, folks. So when you divide the market cap of Bitcoin, which is over $2.3 trillion, by the market cap of JP Morgan Chase, folks, JP Morgan Chase, folks, fits inside of Bitcoin three times almost. Look at that. 2.97 times to be exact. That's crazy. Make that make sense, folks. Compared to what? Yes, folks. That just goes to show you that banks, although they run the traditional finance world, the landscape is changing. You guys can continue to watch my videos and stay informed and stay in tune, folks. And don't let them fool you out your digital assets, folks. This is not financial nor investment advice. But I will say at this point, it's kind of common sense for me to tell you, whether you invest in crypto or not, digital assets or not, that's your choice. But you should at least be holding yourself to a certain standard where you should be learning, folks, about this at least 1.5 hours a week, folks. Break that up into 30-minute sessions, into at least three different days of 30-minute sessions, folks. That way you can bring information in, you can study on it, you can memorize whatever you want to do, folks. But when you start investing and you see your dollars growing and going down, growing and going down, growing and going down, you're going to begin to see which trend it is that's being set, folks. And you're going to learn why all these banks and financial institutions are adopting a strategy, folks. The strategy they're adopting, folks, is stable coins. But one thing to understand, folks, is that stable coins must run on a blockchain. As blockchain or a distributed ledger technology, which is how all the information is distributed, hence the name distributed ledger technology, folks. Stablecoins still need to run on a distributed ledger technology. And the difference is, folks, that Ripple, the company, is enabling an open banking platform, folks, a whole suite where everybody will be able to plug in And it will be decentralized in a sense that no one central person will be able to manipulate the situation in theory. But, we'd have to wait to see how things evolve moving forward. But XRP, folks, is going to be the native gas token for most of this. RLUSD, folks, is going to be held in collateral as collateral. It's kind of like having US dollars or US treasuries. You'll use them as collateral, folks. XRP can be your speculative asset if you want, but XRP can move in and out of any currency or thing of value in an estimated 3 to 5 seconds. And that's not the only cool part, although that is pretty impressive. The cool part is, folks, the fee is pennies on the thousands of dollars. Yes, folks, that'll be that. But nevertheless, folks, that is going to wrap up this video for today. If you would like to make a donation, folks, I am going to put them all up now. All right, folks, this is for Bitcoin. Yes, folks, always, always, always well appreciated. This one here is for Ethereum. Thank you, folks. And then this one here is for Hedera Hashgraph H bar. Thank you. And folks, this one here is for Stellar Lumens XLM. And last but not least, folks, my personal favorite digital asset, and that's going to be, folks, XRP. For your XRP donations, folks, drop it right here. And as always, folks, it's always a pleasure to be with you guys every single day, every single night, every single minute spent watching videos, folks, is a minute that you are investing in yourself. And when you do it with a community of people, it's pretty cool because you build together. And when you build together, you often earn together, folks. Nevertheless, folks, this is not financial investment advice. This is KG, your host. Thank you for watching Give Our Digital Assets. Please like, subscribe, and share with everybody you know. Until next time, folks, remember that I told you this. Compared to what? Experience without theory is blind, but theory without experience is mere intellectual play. Immanuel Kant.